Okay, and we're live now. Good morning, everyone, and welcome to the last episode of the Crypto Hour for 2022. Today we're going to have a look at 2022, what happened from a kind of like flyby perspective. But in particular, we are going to have a look at 2023 and what it has in store for us. So what we can expect from, not just from the crypto point of view, but in particular for the economy. So we look at different metrics that can kind of like in a way show us at least the direction of travel for 2023. So let me start straight away. Let me share my screen. Okay, let's start with, as usual, we just with the calendar for this week, the economic calendar. The main bits of news from this week were the inflation numbers for the US and also the rate announcements from the Monetary Committee again in the US, and then followed by the UK as well. So as you can see, the numbers for inflation are starting to see a slow decline in inflation from the highs that we reached a couple of months ago. So that's one metric that is going in the direction that the authorities wanted to go. And this is something that was pretty much actually expected, but even better than expected in a way. I mean, I know that the numbers in here are in red, but generally speaking, green numbers are because, higher inflation, normal circumstances means that, more economic activity, but not obviously in this particular case. So the authorities wants to bring these numbers down, and until they are down to within their usual target of 2.5-3%, they're still looking to restrict economic activity to for that to happen. And the other big announcement was the interest rates, which went up as expected in the US by 0.5%, so 50 basis points. And this is together with the GDP figures. They show quite robust growth of 2%, and which is kind of like a strong number. So sorry, this is sorry, I was looking at the wrong number. Sorry, this is for New Zealand. But in the case of the funds rate, the increase, there was kind of like a big expectation, because for the past 4 quarters we have seen the US increase interest rates by 75 basis points every time. Mm-hmm. So this is the 5th increase, one after the other, and the kind of the rate of increase has slowed down because we're starting to see the first effects of the previous decisions on the inflation numbers. But there was a kind of like a little bit of disappointment for the market. Although this was expected, there was some hope that this increase could be even smaller than what actually happened. So a lot of people were expecting this to be like 25 basis points instead of 50. But we will see shortly why that is not the case. So this is in the US, and then we had in the UK the same thing, where the interest rates went up by 50 basis points again. But we're starting to see some disagreement in the Monetary Policy Committee. So where before they were expected to all agree towards this, there were like 2 dissenting voices. So this is what it means, 7 for, 2 against, and nobody abstained. There might be, again, some people they are thinking that the economy must also need to be supported, because in particular in the UK, we're in a different situation from the US. The UK is actually suffering from kind of a quite bad economic environment right now. So they're in a recession, and also suffering the effects of coming out of the European Union single market through Brexit. It's remains to be seen if the US will follow, sorry, the UK will follow the US, or it will start slowing down in the new year, the amount of increase in interest rates as well. So this is what happened from this week. But what I really wanted to concentrate on is the, I'm going to look at the past year, both for the S&P 500 and also what is even more important, we'll have a look at the bond market, because that's what determines, what reacts more immediately to the interest rates increases or decreases, and determines as well the cost of funding for businesses across the broad spectrum. So this is what's happened in 2022. So I'll bring it so that the screen represents just 2022. Okay, if you can see here, we reached actually right at the the last, I think it was the last day of January, the last day of December. So right at the end, basically the beginning of the year, is where the market reached its top, and then it started actually decreasing, as you can see, with a series of lows, lower highs, lower lows, and kind of like you can see, this is in a zigzag fashion that is still into that kind of mood, and where it's dropped, at one point up to 27%. At the moment, we are at about 19% drop for the year. Okay, this is the daily chart, the daily chart I'm looking at. So this is the backdrop of how the American economy, obviously the one that we always look at, because it's the largest economy, at least free economy in the world, apart from China. But it's then like a backdrop in comparison to which we can then judge everything else that's going on, and in different markets. And one thing that I wanted to warn you is, like, if you do listen to economic channels, like CNBC or Bloomberg or things like this, be careful, because when they refer to the markets are booming or whatever, they always refer to the Dow Jones, which is the Dow Jones Industrial Average, which is a pretty meaningless index, because it's formed by only 30 stocks, and the fact that it goes up and down is not representative of the whole market. The S&P 500 is much more representative, as it contains 500 stocks. So it's more indicative if the whole market is going up or down. To understand this and say, why is the market gone down, and what are the reasons behind it, we need to look at the cost of funding, and this is basically, we're looking through the bond market. By the way, just to put things into context, if maybe I'll go to a weekly chart here, so we can see more data into one screen. So we have been in a really in a one-way market, really, since 2009, as you can see here from this graph. So this is still the S&P 500 that I'm looking at. Okay, with the two even further than that. Just I'm not going all the way down, but in a sense, the two big crises that we hear after the one in 2000, but the more recent one is like the 2008 mortgage crisis, which was very deep, even much deeper than what we're experiencing now. So if you look at this, we are talking about 56% drop in a short period of time, in only a few months. And that was much deeper even than the crisis that we had in 2020. So this is the pandemic crisis, and now it's nice to see how it's represented in in the chart. So we had pretty much like unparalleled growth for over 10 years. And then we had obviously that, the pandemic, and the market dropped by by 35% during again with a very, very short period of time. So really just over a month, the market lost 1/3 of its value. But if you look at even where we are now, even after the drop that we had in 2022, we are still at above the pre-pandemic levels, which is here. So we haven't even touched the levels that we had before the pandemic, and this is kind of like significant because as I said to you before, we've had during this time, this kind of like the 2020 up to the really beginning of 2021, we had unparalleled amount of money being injected into the system. So this money has to find its way somewhere. Okay, and this is why you see, 2020 wasn't a good time for business in general, but you can see that the market kept going up. And you think, why is that? Because simply there was, so much money swimming through the system that needed to find its way to some place. And obviously people, at the time where the banks, were offering pretty much 0 interest rates, people were then putting the money into, stocks, cryptocurrencies, and that's why we had a boom in 2021. But if we look at the bond market, that can kind of like show us what's likely to happen in the near future. So this is the 10-year. This is the 10-year Treasury note futures. Okay. So as you can see here, maybe let me just go back in time again. This is a weekly chart. Okay, so it goes back all the way to 2000, to the year 2000. The way you read this chart is that the lower the value on the chart, the higher the cost of borrowing. Okay, so because this shows the so basically the price of bonds, and as the price of bonds goes up, then the yields go down. Okay, so if you can see, we have seen a trend from the year 2000 for the cost of borrowing basically to go down. Okay, because why is that? Because again, and it's something that was started. Have a look at this, how significant it is in 2008. As a lot of cash was introduced again into the system, and obviously when when cash is more available, it costs less to borrow it. So, and that's why we see here a growth in the price of bonds, which basically then brings the yields down. And as I said before, when the yields go down, people look for other places where to park their money, because they're not getting much by either leaving money in the bank or buying bonds through financial institutions, because the returns are not great. Okay, and here we see this is a trend that started way before the pandemic. So the fact of the kind of like money printing started in 2018, and you can see it went all the way up in 2019, and there was a pause, and then boom, when we got to 2020 with the pandemic, you can see here, and the cheapest money was actually in March 2020, when the pandemic broke out all over the world. And you can see that it stayed at, and that's why we saw a kind of like a boom in 2020, 2021, okay, when the cost of borrowing was very, very cheap. Okay, and then from really the beginning of 2021, very slowly, the monetary policy started tightening. Okay, very little at a time. So it was hardly noticeable to begin with. And then, we started then towards the end of 2021 to have the interest rate rises. And you can see then the acceleration, here, the acceleration of the cost of borrowing basically going up. Now, what's happening right now? See, there was a rally and again in June and July, and now there's kind of, the markets are desperate to start going up, but and you can see now that there has been kind of like a reduction again on the cost of borrowing in the past few weeks, and that's the reason as well where the markets are having a pause. And going back here, you can see now during the same period, the S&P actually started growing, going up again. Okay, and this is, you can see, it's very highly correlated with. Let me see if I can put it on the same chart actually. Where is it? What do I have here? Sorry, I can't remember the name of the Zayed. No, this is not very good. Sorry, I'm going to take it off. But so I would say this is directly correlated to the cost of borrowing. Now, the expectation now, whatever happens between now and Christmas in the next week, and we always tend to have a little Christmas Santa rally, what it's called, to make generally to enter the festivities in a kind of like a good mood. The expectation is that after that, in the new year, at the beginning of that, the market will then carry on in this trend at the moment, which is very clearly a bearish trend until at least February and maybe the end of the first quarter. So this is where everybody, all the kind of the first maybe sign of bottoming out, we could reach towards, as I say, towards the maybe February March, and because we had the last committee meeting for the monetary committee meeting. The next one is going to be in February, where we're probably going to see another 50 basis points rise, which would bring the borrowing in the US above the 5% level. And that will probably bring us closer to what the market expectations are, around 5.2, 5.3% as a top rate of interest. But we also have to look back at. Oh, sorry, I don't want to use this anymore. We also have to look back at similar situations that happened in the past. And you can see that this could potentially go on for a considerable amount of time. So this is what happened in, example, between 2003 and 2007, where the cost of borrowing was, way higher than it is now. And it's not necessarily like we've been used for a long time now to very cheap interest rates. Okay, but historically, there have been times where things have got worse and they stayed worse for quite a while. Okay, so we might be entering a new phase of a different economic paradigm altogether, where we, then which will affect not just the stock market, but would affect the property market as well, because as interest rates go up, then the demand also dries up in the property market and causes a drop of property prices, and that then causes another problem because a lot of properties are then underpinning mortgages and loans and cause all other sorts of problems in the economy. So My expectation, and I'm pretty happy to draw a line in the sand, in the sense that this is what I expect. Then I might be wrong or I might be right, and also only time will tell. But my expectation will be that we'll see a bottom on the stock market towards, let's say, the end of Q1. Okay, and that probably will offer the best opportunity to then start buying stocks, because we are now gone back to the levels that we've seen pretty much during the pandemic sometimes, especially for some technology stocks, like for example, we all know Amazon. Yeah. So this is where Amazon was in 2020. Okay, March 2020. Okay, we're not that far. And look at what then happened during the pandemic, and what happened to the price of Amazon stock. It pretty much doubled during the pandemic. Now we're back at those sort of levels. I mean, is Amazon a worse company now than it was last year? How is their business? Are they making more money or less money? So these are the kind of questions that you got to ask yourselves. If you are thinking of investing, it's not just a game. I buy something, it goes up. I buy, sell something, it goes down. It's obviously there are reasons, behind why these things happen. But at the end of the day, if we are thinking of investing, you should then look at the business behind the stock that you are thinking of buying, and do your normal due diligence. But I'm saying that some of the largest companies in the world, so this is Amazon, another one who is that you all know, it's Google. Where are we now? Google is obviously not hasn't gone back to the 2020 levels, but still we can see kind of like a healthy drop of well over 30, 1/3 from where they were a year ago. Okay, so I'm thinking that some of these, and I said this is not a recommendation of any sort, but especially for some of the tech companies or the tech funds that you potentially might be thinking of buying, will be at a almost like ideal price level within the next 3 months. Now there is, as I say, I expect still to be a little bit of quite a bit of bloodbath in the stock market, but this is going to affect in a way the technology stocks a little bit less than other stocks, because they've been really pummeled already. Okay, so they have really gone down more than any other sector. But so if within that sector you look at the very strong companies, then I'm thinking it wouldn't be a bad strategy to to place some investment in a market that in 2022 has been pretty much negative across the board. Okay, so for crypto, for stocks, for other types of investments, very few assets have actually gone up in price in 2022. Okay, most of assets are showing a loss. Okay, having move on from there and going on to cryptocurrencies instead, what should we expect for Bitcoin and the general cryptocurrency market? So let me just take these. What should we expect in general by this kind of by cryptocurrency? I mean, we've seen the kind of drop in 2000, and so we were up here in 2021 in November, so or just over a year ago. So at the moment we are 75% down, and this is probably the stronger assets in cryptocurrency, okay, which is Bitcoin. Other assets have gone down even more than that. So the situation right now, although we've reached a kind of like a yearly low, let me just go to a daily chart here to do a little bit more. although we reached a yearly low a while ago, okay, as you can see here at 15.8 in the 21st of November, we haven't had such a bounce as the markets maybe were expecting, and we can see we've been in a range really since June 2022. You can see, and then just recently when we broke that range, and we established another range. Okay, just below it. So to be honest with you, my feelings about Bitcoin and in general the crypto market is that at the moment they are like held a ransom by factors that are outside of their control, because following the and we've seen the biggest changes that we've had in 2022 from the point of view of prices are being caused by not by cryptocurrency problems as such, but by company problems, so kind of like first world problems that have involved some of the players that that invested in cryptocurrencies. So like Voyager, like Celsius, and like more recently with through FTX. And unfortunately, when these things happened, it kind of opens a cascade effect, and then involves other players, even that have done other players that have done everything right, but they're still involved because there's a loss of trust generally in the market, in the asset class in general. Okay, so now where I'm not saying again when we reach the bottom for Bitcoin, nobody can say that, because what we are looking at is is anything else going to come down down the road? Is for example Genesis going to go through bankruptcy or not? So until we know the answer to those questions, we can't say if this was actually the bottom of the cycle, or if there's some more pain to come. Okay, but generally speaking, I'm thinking the Bitcoin and the crypto market is showing a little bit more resilience than the stock market, and it might look as if most of the pain now are washed through the system. Okay, I'm not saying again, guys, this is not a financial advice. Okay, so I'm not saying buy now or do any take any action in particular, but what I would like to see for the actually being in the next phase of the cycle, I would like to see the price move back into the 22,000 range. Okay, so I take out this drop here and be in the 22,000 range. That could be a very good then springboard for the next cycle to come. But again, time wise, I'm still waiting to see what happens with Genesis, and I'm looking at the same time frame, so February, March of next year, to see some proper movements that are a little bit more than the current I would say green shoots that we experiencing right now. But on a kind of like fly-by higher level, I can say at least that most of the pain has already washed through the crypto market in comparison with the stock market, where I can see still some pain coming, especially from all those players that make money when the market goes up, and they're all desperate for you to tell you that yes, you can buy now because it's a good it's a good opportunity, but at the same time, if you look at the numbers, there's still more pain to come, unfortunately. Although it's Christmas, I can't stop looking at the numbers. So this is the kind of like recent movements in the market, and you can see, so this is the total market cap. And if you can see, the last month, pretty much we just gone sideways, as we can see. So we were looking at the Bitcoin chart, but this is the whole market. We reached a bottom at the 22nd November, where we actually about the whole value of the whole crypto market was 121 billion. At the moment, we are about 880. We're going between 800 and 900 a couple of days ago. So at the moment, I would say the market is in a waiting mode. Okay, so waiting to see where the next trend is going to be. So are we going to go back up? So we're going to see a lot of money then being put in the major cryptocurrencies, so that to drive them to the next level, or are the bears going to win this battle? And from the point of view of waiting to see what happens with Genesis, is really for me, like every day that when we hear no news, it's kind of like no news is good news, because the business that owns Genesis, and by the way owns Ledger and owns lots of other assets, also owns Grayscale. So it's very different from FTX in the sense that they've got some really good businesses that are generating cash flow. Okay, and for example, Grayscale generates over 300 million a year in fees alone. So every day that goes past, there's more chances of a deal being reached through to basically avoid liquidity issues. So to refinance and to get some maybe some equity capital in the business that will allow them to get past this issue right now. And obviously, as the price of cryptocurrencies in general goes up, then also the cryptocurrencies that they hold go up in value, and make them more make it easier for them as well to then let's say pay some of these outstanding liquidity issues. So we'll see what happens from that point of view. But for me, every day without bad news, it's a good news in itself. Now, talking about other subjects, on another big news that we had of just recently is that now PayPal will partner with MetaMask to allow users to purchase Ethereum directly. At the moment, PayPal allows people to use to buy cryptocurrencies through the system, but you can't then move them out of PayPal. So it's not a proper exchange like you used to with Binance, Kraken, Coinbase, etc. Now, instead of you having to buy cryptocurrencies, for people that use this system through PayPal, people will be able to buy directly from MetaMask. So there will be an integration where you can buy cryptocurrency with MetaMask from MetaMask directly using PayPal as a checkout. And so that could be also another say nail in the coffin for the kind of the debunking itself. So because although banks can say no to you, they find it a lot more difficult to say no to PayPal and all the business they bring. So it could be another way for people that have had problems with exchanges in the part of the world, to sidestep this, because obviously then the tokens that you buy will not be in PayPal, will be in MetaMask. So from then you can do whatever you want with them without limitations. Okay, another thing that there has been in this week that there's been a lot of talk about is Binance and the FTX collapse. Okay, so first of all, we had, for those of you that know Kevin O'Leary, he likes to play the big man, and he's the host of like Shark Tank and seen as a big VC. Obviously, Kevin O'Leary was involved in a way. Was involved actually. And a lot of his fans were in FTX. So at the moment, he's left a little bit red-faced, of as a big financial guru. That how could you not see this coming? And if now, basically, this is, if you can see, is now blaming Binance. And for me, kind of like, if I translate this as he's throwing his toys out of the pram, really, because it's not taking the responsibility, or we should have checked the business that he deposited all his funds with. And it's now, as usual, when things go wrong, it's always easier to blame somebody else than look stupid and thinking, yes, I was an idiot, having a lot of funds there without making sure that the company was being run properly. And we're not talking about little money here. We're talking about lots of millions being locked at the moment in FTX, and nobody knows when and how much people that got funds stuck in FTX will be able to get them back. Okay, but from that, there has been a lot of FUD and misinformation about Binance. I'm sorry, where are we? About Binance. Let me just move this here. Because a lot of people were thinking that Binance, again, there were problems, they were not trustworthy, and then they didn't have enough collateral to pay back all the money that people have deposited. And so there has been kind of like an outflow of funds from a Binance centralized exchange, and people are taking money out just for safety. So there have been, Binance has done several whatever they're called, several companies. They have checked the Binance's reserves to just reassure people that actually they do have the collateral in place, and they can repay everybody if they want to. And this is what the CZ, the chairman of Binance, said that as he came out again, he said people can withdraw 100% of the asset they have on Binance. Okay, so they say that the assets on Binance are collateralized one to one. So if somebody wants to, even if 100% of the user wanted to withdraw everything they have on Binance, it'll still be okay. Now, and also, I see they are going through an audit. So that's not just looking at the collateral, but looking at the liabilities, and because the collateral itself, without knowing the liabilities, is not telling us much. But this is why we it's trying to reassure the market, saying that Binance doesn't owe people and money. They don't have loans from other companies or from other funds, and also they don't have VC investments, so they don't owe anybody any money, and also they don't have loans to other people that we depend on for our next payroll. Kind of like loans with high interest rates. So it's reassuring in a way, and this is like one thing. And sorry, where is the other Binance article? There we are. So CryptoQuant, which is again an auditor, verifies Binance reserves. Okay, so there is no FTX-like behavior, which would use where was it? So there's no FTX behavior that was using customer funds to then for users that were not approved of. In this case, there's nothing like this going on. Let me just see. Okay. So here we can see the difference of the reserves that we had in Binance compared to the ones we had in FTX. And you can see here on the left we have the stable coins reserves on Binance, and on the right on FTX. So there is a big difference in the amount of reserves. So we can see we've got 24 billion stable coins that Binance holds as reserve. And even if you look at the Bitcoin reserves that they have, the highest that they've ever been so far. So both the Bitcoin and the Ethereum reserves are very high. So although there's been a lot of these fear, uncertainty, and doubt about Binance, so far all the reports that we've seen by analysts and by auditors, I have confirmed what the CEO says, is that they are completely out of any possible problem, because they got plenty of funds to to repay anybody if they wanted to. On a different subject, as we were talking about problems and the price of Bitcoin going down, now this is on-chain data that shows us that what they call the whale wallets, which are basically holders of Bitcoin, they have between 100 to 10,000 Bitcoins in their wallet, have actually accumulated 726 million in the past 9 days. Okay, and also there've been an accumulation of stable coins, because in a way it's you have to have stable coins before you go into the market. So it's in a way from the market, from the actual holders of Bitcoin, this is seen as a vote of confidence. Okay, because people that have got lots of Bitcoins, they're still buying. They're still buying now and accumulating more. Okay. So there is not only that, but there's been an increase on addresses. They actually hold this amount, at least 100 Bitcoins. So this is, one thing is what you hear. The other thing is looking at the numbers again. Okay, then you can make your own mind. On a different subject, we have this is kind of like good news, and Coinbase, as other cryptocurrencies, they support certain networks and not others. So often there has been cases that people sending them particular coins on a particular blockchain, and with those coins basically are irretrievable because Coinbase refuses to support them. Okay, one of these being, for example, the Binance Smart Chain. So you're in the position, because when you send coins to an exchange, you don't have control of the address, even if it is your Coinbase address that you're sending the coins to. They have control over it, not you. So had it been mistake done on one of your addresses that you have control of, there would have been easy ways of getting these coins out, but Coinbase has steadfastly refused to help anybody that had sent funds by mistake. Okay, now they've announced the launch of a tool where, obviously, for a fee, because they're going to be charging 5% for this, but for a fee, users will be able to retrieve some of these tokens that have been sent by mistake. So we'll see exactly how this works, but it's good news for both for Coinbase, and I think probably one of the drivers behind this decision is that they can charge 5%. So I think they are literally strapped for cash as well, Coinbase. So if they can make some money out of something they should have done for free a long time ago, then then they will. But also, again, freeing some of these funds, it's good for the cryptocurrency industry, because these are funds that, from crypto users, they have been, again, locked away, not being accessible. So if people can get hold of these funds back, then maybe a part of it can go back in the market, and being used and creating value. So it's a good news from that point of view. On regulatory news as well, this is important too. So Japan had a corporate tax rates for cryptocurrency issuers that were very punishing, in a way that if you were a company that issued a cryptocurrency and this cryptocurrency then went up in value, you had to pay basically corporation tax on it, even if you hadn't sold any of those tokens. So basically, even on the unrealized gains, you had to pay capital gains, which is a big problem for issuers of cryptocurrency. Now there is a proposal to change this so that companies wouldn't have to pay this levy on unrealized gains from the holding. So, and that will make a lot easier for companies to set up in Japan as cryptocurrency companies, and so you can see it now that from one side there are problems because still a lot of countries are trying to find a way of regulating this at the moment has been seen a little bit like the Far West, but at the same time, there is competition between countries to attract investments because when crypto companies set up in a particular country, obviously, so then they are going to end up paying taxes in those countries, and so it's different countries like Kazakhstan, for example, have put themselves forward as a good place for crypto companies to do business in. And now we're seeing in other big countries. I mean, Japan probably one of the largest that have taken any one of the, at least is trying to take one of those steps. And we will see more as the industry develops. We will see more competition between different blocks of trying to attract in technology, because this at the end of the day is a technology investment from the point of view of any country. Now, we couldn't finish the 2022 without talking about Cardano, obviously, And so a couple of news, good news about Cardano. One of the most used wallets in the business is the Trust Wallet, and I know many of you may be using Trust Wallet directly for to keep your coins safe. Now there has been Cardano, the ADA. Has been enabled to be staked directly from the wallet. Okay, so it's again, I mean, it's not a massive news from that point of view, but obviously Trust Wallet has got lots of users, and so this is how Cardano moves. It's kind of a little improvement, blocks here and there, and this is just another, I would say, another brick that is creating the Cardano foundations. Okay, and there are announcements like these if you follow the ecosystem pretty much every week. On a slightly different note, and this is kind of like, take it with a pinch of salt. There is kind of like an AI algorithm that analyzes prices. So this is, again, take it with a pinch of salt. But this algorithm is predicting a price of a Cardano by Christmas Day. Okay, so just about over a week of 43 cents. So at the moment we are at 30 cents. So, it's a little bit hard to believe, but we're talking about almost like a 50% increase predicted. Now, I've got no idea if, what the bases are for this prediction, but this is a Neuro project base price prediction algorithm. Okay, which uses a machine learning to do its forecasts. So there you are. So just to, at least to give you a little bit of a good cheer, good Christmas spirit, I think so there is something that can go up and that can make us feel a little bit better. Another couple of things, and then we'll take some questions. This is a announcement of Ripple. They are facilitating remittances from 19 European countries to Africa via a local partner, and this could be, I mean, obviously they're not the only network that does that, but remittances are a big business, especially from they like to say first world country to third world countries, and we've seen it both in Europe but also in the US. From people that are moved to the US from the Caribbean or from South America, that are sending money home on a weekly or monthly basis. So this something like this is the real sometimes users of cryptocurrency that can make a difference in the real world, because it makes a difference you sending money home and having to pay maybe a 10% fee through Western Union, or being able to do it through crypto pretty much at almost at zero cost. So it can make a big difference, and one of the few good things that you ever hear me say about Ripple, by the way. Anyway, and this is kind of the last thing on Polygon. QuickSwap is an exchange on Polygon. So QuickSwap and Versa Games have launched a gaming hub on Polygon. That it will be used to incentivize players. They use it through through different kind of rewards. So the good thing about gaming on Web3 is that the investment have kept pouring in even through the bear market. And even though many of the tokens, the gaming tokens, again, have gone down a lot in prices, the investment at the back of them hasn't really stopped. So this is seen as one of the biggest sectors within crypto, and probably the way as we move through the cycle and we go through the next bull market, this is probably seen like the way that most new users will be onboarded into crypto will be through gaming and NFTs. Probably, again, it's a guess, but this is kind of like an educated guess. So this was my last news for the year. So let me stop sharing now and see what do you guys think. First of all, let's have a look. Where are your Christmas jumpers? Yay, Jonathan! Fantastic. I can see that. Come on, guy. I'm not impressed by the rest of you though. Come on, we did say last week that we had to have a Christmas jumper. Where are they?
It's 23 degrees here, Luca. We are not wearing jumpers, but I do have my Christmas table behind me.
I know, you could have put a Christmas hat on or like a something else, a bit of tinsel.
I'll go find some reindeer ears, shall I?
Okay, and where are we
Like in
saying?
Pierre's ears. Are they ears in Pierre?
So let's have a look at a few questions. Cornelia, correlated or inversely correlated? So what are you talking about? The bonds in the stock market? So the futures were not, the futures were not the stock market futures. They were the bond futures. Okay.
Yeah. So, and you try to make this picture to show us the high correlation between the two things, and then what I just saw in this image was in a split second. It looked like a mirrored image.
Yeah, exactly that. So it's negative. You're right. Yeah, it's negative correlation. Yeah, obviously, as the cost of funding goes up, the business basically goes down. Because it's simple. It's simple. It's kind of your cost. Yeah.
These basic for you, it's very simple, but these basic economic things, especially for bonds, is still very difficult for me.
Well, just think about it. Instead of thinking about bonds, think about, let's say, if you have a mortgage. If your mortgage rate goes up, you have less money to spend. Simple as that. Your income is the same. Your costs go up. You got less disposable income. Okay. So.
And I was very worried also. That's my next question about this. Ledger being under a company that owns the Genesis and FTX or Grayscale as well. So is there any consequences for Ledger? If there's bankruptcy, are the Ledger funds gone?
Ledger is Ledger is owned by FTX. So it was born. Sorry, I was wrong there. The company that owns Grayscale is a digital currency group. It owns several different companies. And FTX bought Ledger a few months ago, very recently. And they're looking now. They're looking now to the administrators are looking to get permission to sell it, so that they can then use the money generated to sort out the bankruptcy.
I understand, but do you Ledger being in the FTX problems? Do you see there any risk for people who have their funds in cold storage on Ledger? Should they go to Trezor or should they spread among MetaMask?
No, that's got nothing to do with it. So that's got nothing to do. The business Ledger is a decentralized wallet, so they don't control your funds. Okay, so there's absolutely nothing to it. Well, the business is the business that makes the actual devices. It's completely separated from your funds. Okay.
Yeah, but the only thing that would, if there is a bankruptcy and if they are bankrupt, I mean, the only thing that we all need, as I understand, for cold storage to be continue is for the ledger software to keep working. I mean, if someone shuts down, or if it's shut down because of a reason in this problem, then there is a huge problem. Or
I mean, if that was the case, you wouldn't stop working from like in one day because of a court decision, you know. So if there was any problem in just in case, even if the worst was to happen, what may be affected is the future updates. It's not the current software is running, and it's running. It's not going to stop running because of bankruptcy. So in that case, if that was the case, you would have time to, you know, if there was any problem, to transfer your assets away from your ledger device and onto another device if you were worried about that. But it's nothing to worry, you know, from the safety of your funds, you know, in the short term. Okay. And it is a good business, so it's not something that will go down. So there are no bankruptcy issues with Ledger. It's the owner, like the parent company. So Ledger is one of the good assets that FTX has on its books. So it's be very, you know, somebody would quite happily purchase it from them. No issue there. Oh, I can see Vladimira, like, well done with the hat as well. Excellent. And Maria, that's better. That's excellent. Very good. Very good.
Thank you very much, Luca.
No problem. Okay.
Rudolph's looking for his ears.
No, it's excellent. So, guys, anybody else has any questions to close the 2022?
Hello, Luca. Do you know what happens to cornucopias or basilisk? Is there any news on those? Are they still developing the game?
Yep, there's two separate things completely. Cornucopia is a Cardano game.
Yeah, I know.
And it's still got like a massive community. So it's one of those projects that is you know, powering on. So this one thing is, if you're interested in any of these projects, then go and follow the Discord channels. Basilisk is one of the projects that one of the winners of the parachains on Kusama. And they've had some issues. First of all, there was some issues with after the launch, they had an issue with the block production, and I think they're relaunching the on-chain activity now. But it's still, I mean, all these things are very early days projects. Okay, but I'm still, I mean, generally speaking, I'm still very positive. You know, Polkadot is one of the projects that I really look up to, you know, together with Cardano, Cosmos, and other projects like this. So for me, they're one of the good guys of cryptocurrency, let's put it that way. Then anything can happen, you know, and so these are projects within ecosystems. So we're still talking at early stage. Even for Bitcoin, we're still at an early stage. For something like Polkadot, and then for a project within Polkadot, we're still very, 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 very early stage. So give them a little bit of time to work, and let's go back and have a look in a couple of months, because obviously they've been affected by the issues that they had with the blockchain, but they're still one of the winners so much of the community trust that pushed them to win the parachain. Okay, and well done, Pierre, as well. I like the ears. Excellent. We're getting into the spirit, I can feel. Okay, any other question, guys? No? Everybody struggling with snow? I'm still looking, I keep looking out of my garden. I can't believe that I'm still covered in snow. I know that you guys on the other side of the world are probably sweltering. But
struggling with humidity, not snow.
Yeah.
It's 90%
freezing.
humidity today.
90.
Yeah.
I know. I've been there when I was in Rome. The last time I was in Rome, I was We had 2 weeks where we had a 98% humidity, pretty much like breathing water, breathing and sweating every minute of the day.
We do have snow here in Switzerland.
Yeah, but it's expected in Switzerland. That's the difference. If you don't have the snow in Switzerland, I mean, what's the point of Switzerland?
Where's the picture postcard if there's no snow in Switzerland?
Exactly. So London is a different thing. When it snows, everything is mushy and horrible. And
you have a lot of snow in London now.
Yeah, there is quite a lot of snow. I mean, not in central London, but on the outskirts.
Yeah.
And like just outside on the pavements outside our house is all icy, and got to be a bit careful. It still hasn't cleared, and it snowed on last Sunday, so it's been almost a week now. So it kept very cold, but the temperature should go up in the next few days. So we shall see. One thing I wanted to say to you, and I don't know how many of you have seen the post on the AAW Discord. We are meeting on Tuesday for a drink at the ISH bar near King's Cross, Regent's Park. So from 6 p.m. onwards, for those of you, all of you guys that are around London, would love to see you. Would love to see you there. And we'll decide, see how many people turn up and decide what we might be doing later. So not to be shared though. Remains, what happens in private remains in private. Okay. All right. The details anyway, if you want to see them, they're on the Discord channel and the UK events. So if you need the address where to turn up, they're all on there. Okay. So if we have no more questions, then it just remains to wish you all a Merry Christmas and a Happy New Year. I will start again with the Christmas, with the crypto hour in January, on the 6th of January. Okay, and then move on as normal. In the meantime, I will try to get some rest and something deeper to talk to you about in the new year. All right.
Thanks, Luca.
Thank you, and Merry
Happy
Christmas
holidays
to everyone.
Thank you, Luca.
Thank you, Luca. Merry Christmas, everyone.
Thank you.
Thank you, Luca.
Okay.
Thanks very much.
Merry
All right. Christmas, everyone.
Bye-bye.
Okay.
Bye.
Bye.
Bye.